Hey, welcome. I'm Mike, and I'm joined today by Chad Rieflin, the Director of Programs and Grants for the Consumer Credit Counseling Services of Rochester. I almost had that right.
You just put in thought, that's all.
I put thought. But Chad's joining me today because we're going to be doing a 5-part series. We're going to have 5 tips for entrepreneurs on understanding and using credit properly. So I'm glad you guys have joined me. And I want to just take a minute before we jump in and ask Chad a little bit about who he is and what he does here.
Great. Yeah, so very happy to be here. Thank you again for this opportunity.
Pleasure.
Yeah, so at Consumer Credit Counseling, we're focused on helping people build financial wellness and financial peace of mind. We do that primarily through financial counseling and financial education.
Okay.
And I'm very thankful to have the opportunity to focus on helping people to improve those aspects of their lives because we know it's something that we all deal with.
Sure. And you guys work with both entrepreneurs and the average, just what would you call it, consumer credit holders?
We do. So our main focus is the average person who just identifies any kind of challenge that they're having with their day-to-day finances, their debt. But we also started taking a focus on small business owners, entrepreneurs, because we know how much personal finance and credit affects the goals that they have.
Sure. Well, this is great. I'm glad to be doing this because I know from my own experience how much, credit, debt, credit worthiness, being able to get financing from the bank, and just having some literacy around borrowing and when to borrow, when not to borrow, that was critical for my success. And sometimes it contributed to a lot of my stress as an entrepreneur. So I'm glad to be able to talk about this today. What I'd like to do is let's focus on the first tip that you have for everybody. And I think this gets at something that maybe I overlooked, in this idea that your personal credit has an impact on your business credit.
Yeah, this was a surprise to me as well. I actually didn't realize this until there were some folks at a local program. They were helping small business owners, and they said, Chad, we'd love to have you come in and talk about credit scores and improving your credit. And I was like, why would you want me to come in and talk about that? And they explained the fact that when you're starting off and you don't have any business credit established, financial institutions that you go to for capital are often going to look at your personal credit.
Yeah.
So an advantage is you can get started without having to be in the catch-22 of not having business credit. But the downside is you're putting your personal credit at risk and maybe tying personal assets to some of the business goals that you're working on.
Wow, that's really insightful. It's interesting because I talk to people that complain. They're like, well, I want to get into business, but I don't have any money. The bank won't give me a loan. And you just said something that is really insightful to me, which is, even if you're not in business right now, you can start preparing and getting yourself ready to be attractive to a bank. I kind of had this idea when I was younger that I had this idea, I'd put a plan together, and then I'd just walk into the bank with that plan and get a loan. And of course,
they're going to say, what a great idea. And sure, here's some money.
Yeah, it never happened that way. And that was when I was younger, but I realized, okay, there's got to be a different way to this, different pathway. And when I was more in a more, let's say, mature situation where I was buying a business, what surprised me was they wanted to see a personal financial statement. So I did have a pathway to getting the loan and everything. I was doing an SBA loan to buy some of the debt, but they want to see a personal financial statement, and I was worried because I thought, I don't know that my personal finances look good enough to merit me buying the business. So what advice do you have around that?
Well, I think, like you said, one of the crucial starting points for a lot of folks might be to look at their personal credit and start working on that preemptively while they might be working on their business plan and overall personal finances, because that's going to be a real main component.
Sure.
That credit score piece when they try to get that funding that they're going to have to leverage to get off the ground.
Mm-hmm. And are there? I know we're going to get into a little later some of the things that you can do to build your credit score. But are there things that you think that the banks look at specifically? So there's some general things that we can do to build credit. We'll talk about those. But are there some is there a top 20% that you think people should focus on?
Absolutely. The biggest thing to focus on is the payment history that's being reported to your credit report. That most commonly is going to be things associated with loans that are in repayment.
Okay.
So if it's credit cards, home loans, car loans, student loans, typical things that a lot of folks have. We want to work very hard to make sure that those things are being paid on time.
Yeah, and that's interesting because when I was talking about when I was acquiring the agency that I ran for a number of years, I had to put a personal financial statement together. My net worth was not very high. I mean, it was like tens of thousands of dollars, and low, like maybe, I don't know if I was worth like $20,000, and I didn't have $20,000 in cash. I just had, when you subtracted my loans against the equity in my house, I had a net worth. It's not a lot of money, but they were still willing to give me the loan because I had a good payment history. They knew that I was a good risk.
Right.
And so that's great. So what you're saying is, to have great credit going into a business, you don't necessarily have to have a ton of money. You just have to show a history of being responsible, paying your bills on time.
Yeah, it's very similar to most lending, right? They're going to look at credit worthiness in respect to are we trustworthy based on the evidence they find in our credit report?
Sure.
Secondly, do we have the ability to repay? They're going to look at our income or past income opportunities that we've leveraged. And then they're going to look at capital
Sure.
as the backup, but not necessarily the main thing that they're focusing on.
Gotcha. Yeah, that's good. Well, Chad, this is really interesting. I feel like the big takeaway for me just listening, and I wish I knew you, 20 years ago when I was getting into business, but it's that you can start working on your credit worthiness and your attractiveness as a person acquiring commercial credit and finance before you even have a business idea. I mean, just by getting your personal finances in order, getting your personal credit score as healthy as you can, puts you in a much better place when you're ready to throw the switch on a business.
Right, you're doing the work for your business, even though
Yeah.
it might not seem like it's directly related.
Oh, this is
to work for your business.
fantastic.
And there's help out there to work on those aspects of your credit, get counseling, get education, and the assistance that's needed along the way.
Cool. Well, Chad, thank you.
Yeah,
I can't wait to
thank
do
you
the
again,
next
Mike.
tip.
Yeah, looking forward to it as well.
All right, cool. Guys, make sure to subscribe. I don't want you to miss any of this series. It's going to be really useful. And as always, I love you guys, and I'll see you in the next video.